war, central banks, and NFP. Hello, this is Ahura. I'm going to review the most important events of the week ahead. The week ahead will be a heavy week with too much data and events. Central banks in Canada and Australia will be the first central banks in the next round of the monetary policy meetings. And while supply chain disruptions were slowly disappearing, the Russian and Ukrainian conflict increased the level of tensions and concerns on the future of the energy market. Higher energy prices will end with the longer life of high inflation. We have to wait and see what will be the fate of ongoing war, while we have other economic data as well to watch. Number 1. RBA Monetary Policy Meeting. While according to the latest economic data and inflation numbers, market participants were waiting to see that RBA increasing interest rates to 0.50% by year-end from 0.25% previously, current international conflict can increase the concerns on economic developments. Therefore, it will be a hard decision, which is the reason to say for now no action is expected in a March meeting. This expected decision must be positive for the Australian stock market, or at least soften the overall ongoing pressure on the stock prices. Number 2. US ISM Manufacturing and Service Index. While increasing manufacturing activities in January in expansionary territories confirmed the supply chain issue towing slowly, falling ISM Service Index to its lowest level in 11 months reflect the labor shortage and continuing COVID-19 effects, especially the Omicron variant. Now, in the February numbers, the ISM Manufacturing Index is expected to rise to 58, and the Service Index is expected to rise to 61. Both positive data are supposed to lift the US dollar. Number 3. BOC Monetary Policy Meeting. Bank of Canada was one of the first central banks that took hawkish decisions. They ended asset purchases ahead of schedule, and now we can see that rate hike could be delivered earlier than expected. If the ongoing geopolitical tensions do not make any changes in their decisions, BOC members are supposed to hike their rates by 25 basis points. Canadian inflation in January advanced to 5.1%, which is the fastest pace in 31 years, and increasing the reason for the rate hike even several times by year-end this year. This decision must help the Canadian dollar against this crisis. Number 4. OPEC Meeting. OPEC meeting in the week ahead will be in the spotlight while oil prices tested the 7-year high and Russian attack on Ukraine going to create an energy crisis in Europe. The main question in the energy market now is about the fate of oil and gas market. If Russia withdraws or fade out from this market, can our suppliers compensate this shortage? For now, market will be focusing on the OPEC and its allies, known as OPEC Plus production decisions. Finally, number 5, US employment data. Despite spreading the Omicron variant of coronavirus, 467,000 newly created jobs were a surprise in January. So far, non-farm payrolls have recovered 87% of the losses during the pandemic. On the other hand, earnings are expected to rise 0.4% after 0.7% and 0.5% increase respectively in January and December, while February jobless rate is expected to fall back to 3.9% from 4% in January. Estimated numbers about to confirm the development of the US employment market. These data again must support the earlier decision of tightening policies and put some more pressure on the stock markets. Thanks for being with us and hope this week going to be your week.